In this video, I interview one of Japan's most successful Forex traders. He's a 15-time funded professional prop trader. And in this video, he teaches a simple 5-minute scalping strategy that he's been using with extreme success, sometimes with win rates as high as 90%. And the coolest part is he's generally done trading for the day in only 30 minutes. In this video, he explains his entry criteria, exit criteria, and his entire risk management strategy. If you're looking for a Forex scalping strategy that can actually work, then look no further. Okay, Yuya, thank you so much for being here with us. Why don't you take a second to explain, how did you come across this 5-minute scalping strategy? And then show us a little bit about how this works. What are the criteria for entering and exiting? And then if you don't mind, show us a few examples of how this works.
So basically this strategy just came from me always just being aware of these EMAs. I usually have the 8 EMA and the 50 EMA always on. I haven't really thought about, I know that a lot of people used to take, trades based off the morning averages, and I wasn't too big on it. But then I started noticing as I was back testing, trading the NASDAQ, because I am starting to implement indices into my, trading arsenal. I haven't really been big on it just because I haven't traded NYSE, but I've been trying to commit myself to trade the NYSE, the stock exchange open as of late. So essentially every time I looked for a regular entry, I've always noticed something, particularly with the EMAs. And what I've noticed was essentially that my 8 EMA would cross the 50 EMA. And the more and more I came consistently at the same time on the charts, I just noticed that pattern. So I decided to, start taking trades based off of that. Also added, my own confluences that I still use to this day, the typical breakouts, engulfing candles, and all of that as well too. So I started implementing the 5-minute, time frame. And usually when I do trade at these high peak volume hours, essentially with the NASDAQ, that is, 11:30 my time, PM in Japan, but essentially 9:30 a.m., as the hour after the New York Forex Open is when the stock exchange opens, So essentially what I've noticed is that there's a lot of volume that comes here, and that taking trades on the 5-minute, it is risky because stop losses can be hit. But usually a lot of the times if you're taking trades off the 5-minute, I just noticed that we have a very small stop loss, something that's more psychologically manageable. And at the end of the day, you have to be personally feel the most confident about a trade before, entering a trade. And a lot of the times if I don't enter a trade, it's due to the stop loss being too big. So that basically combats one of the psychological barriers and blockage that I do have, is essentially big stop losses, right? So with this strategy, it is very simple, right? So the key to this strategy is, one, you have to trade at high peak hours. So what I mean by that is, if we're using this NASDAQ, and it's something that I've been back testing for about 6 months, was the NASDAQ pair. So the main thing that you want to do is this
Testing, or you've been live testing?
Live testing on my personal account. Obviously I haven't used big lot sizes because it's something that, I wasn't too familiar with indices, but it's been something that I've been trying to do on a consistent rate. And it's allowed me, particularly when I go for a 1-to-1 around, a 90 plus, percentage on the win percentage essentially. And it's been something that's been, I guess you could say, since it's a 5-minute, it allows me to be in and out of a trade, which is something that I really look for in trading, right? Something that I can get in and get out right away. So it's just something that, intrigued me by, being able to find a strategy based off of this that I can get in and out. And like I said, wasn't the biggest fan of trading indices, but, combining with what I know and using this strategy that, I essentially just, stumbled across just through a lot of times just looking at the indice pairs, it's been a huge blessing, and it's something that, it's been working for these last 6 months for me on my personal account. So essentially the key to this, strategy is, the number one key is trading at, high volume time. And essentially, if we're looking at the NASDAQ, the highest volume time is essentially the NYSE Open. So that's your number one priority, right? Trading at the high volume time. You can still use this on GJ as well too, but I've personally been just using it on the NASDAQ, and I still believe that you can test it, use it on GJ. But I feel like what I've been doing personally with GJ, GBP, JPY is, good enough already that I don't really need to switch up what I'm doing. But going back to the NASDAQ, right? This is the number one thing. And the key is to always wait for the NYSE open. So essentially 9:30 a.m. Eastern is exactly when you want to hop onto the screen, or a little bit before, to give yourself, some time. And then this is when you want to look for these two confluences of, the strategy. So essentially what you want to do is, first you want to turn on your 8 EMA and the 50 EMA. And what you do is you go to indicators, and then from the indicator mark, all you do is going to EMA, and then you click on morning average exponential, right? So you click on it twice, and then what it does is you get this on the side of trading view, you get to put the color and everything. Personally, I like the blue as my 8 EMA, and that's where you put the 8 on the length. And then I like red as my 50 EMA, right? So that's kind of what I do. I have those two things on. And if you guys want to back test it personally, what you can also do is go to indicators, and you can go session breaks. And I know you've created a video on that before too, but you can just basically have the session breaks on, and then just go back to the NYSE, the New York Forex time, and just, back test it during those times. So going back to the strategy. So essentially what you want to wait for and what you want to look for is the 8 EMA to cross the 50 EMA on the 5-minute time frame. So essentially what I'm talking about is my 8 EMA is this blue line, and then the red line is the 50. You want to see this crossing of it, because this indicates that a reversal or a big momentum is coming in the market. And like I always talk about, right? I say this to my group: volume plus momentum, or volume plus volatility equals momentum. Right? So this is my key formula to, creating success in the Forex market. So essentially what this crossover is telling me, combined with these engulfing candles, is that we have a lot of volume and a lot of volatility in the market.
Hey, if you'd like to trade live in the mornings with Yuya and copy his exact same trades and have him mentor you to becoming a successful trader, then go to fundedtraderfasttrack.com right now.
Essentially, when you get these two things combined together, you create a thing called momentum. And momentum is exactly when you want to be in the market, right? And anything you do in life, let's just talk about the crypto boom. The momentum was very high, and you wanted to be there when the momentum was rising, right? You don't want to be there when the momentum has died down. With anything you do in life, momentum is a big thing. Same thing with the Forex market. So essentially right here is an example of volume is the time we're trading, right? We're trading at high peak hours, which essentially is the NYSE open. As you can kind of tell with this vertical line that we have here is the NYSE open. So we saw a lot of volume. We know we're going to get volume with the NYSE open. Next, the volatility. We noticed that the range that was created prior to the open was broken. And essentially what happened is, as we came back down into the range, this right here that I've just highlighted, this little yellow thing, is the volatility. It's a manipulation occurring in the market where essentially banks and institutions are taking out highs, grabbing stop losses, and then flipping the market. And essentially when manipulation occurs and then you have volume, which is the NYSE open, you create momentum. And what we see all right here is this momentum. And essentially you want to confirm and be more on, the right side of the table. So essentially when you use this EMA as well too, and when it crosses, that's when you want to execute and be in the trade. So going back with that, right? You want to trade at high volume hours, but you also want to see this 8 EMA cross over to the 5. So when we see this cross right here, we have this candle right here, this 5-minute candle. And when you add confluences like the previous range breaking, the New York before the NYSE opens range breaking, combined with this 5-minute candle that breaks that range, plus the 8 EMA and the 50 EMA, or the 8 EMA crossing into the 50 EMA, you get, the trade that you want to take. And these are the type of trades that I've been taking every single time during the NYSE open. So what you do is you basically wait for that cross to happen. And essentially what you do is you can either enter at, the close of it, or you can also enter it impulsively. And I'll show you an impulse move that you can take in a different example. But in this situation right here, we would wait for that candle to close. And then, you would enter right here. And what I always do is usually put the stop loss about a few pips above the 5 minute candle that breaks it, or the one that crosses the 8 EMA, the 8 EMA crosses the 50. So we do have the entries right here with the stop loss right here, right? And all I've been doing is just going for a quick 1-to-1. So essentially with 5, 10, 15 minutes, I was in and out of the trade. And that's typically what I want to see with the 5 minute trade, right? You don't want to be in the trade longer than 30 minutes, I would say. 30 minutes should be the cap. If it's not moving after that, then you don't really want to be in that trade. It's probably going to start creating a range, right? So that's one example of essentially when the 8 EMA crosses the 50, you get a high, confirmation even on a 5 minute, because you have volume and volatility, and essentially you're going with the momentum. Even though this trade was probably at the bottom of the momentum, you still were able to catch a 1-to-1. That's why I personally just stick to the 1-to-1 using this strategy. And honestly, sometimes you might miss big moves, but if you're consistent on a 1-to-1, risking 1% every time, let's just say 90% win rate, you can do the math, and essentially it can come out to be a lot after one single month if you trade every single day, right? So that's one example. The next example that I'm going to talk about is essentially the same thing, but how we can take impulse trades. And essentially impulse trade is basically taking a trade before the candles close, right? So we have this opportunity right here. So essentially we have the New York session range right here, and then going into the NYSE Open, where I will put this vertical line right here to signify the NYSE Open. So the NYSE Open is right this 5 minute candle that really essentially broke that range. So we combine the range right here, and then we combine this break, and then we also combine this 8 EMA crossing into the 50 EMA. Then this right here is an example of what we can do to essentially take impulse trades. So at this point here, as we start seeing this, because we have volume, which is the NYSE Open, the volatility is essentially when a high or low gets broken, there's volatility in the market. So essentially right here, we would take a trade and then have our stop loss right under this 5 minute candle. So typically, like I said, only a 1-to-1 that I go for. And then essentially the 1-to-1 was hit probably within a minute or two, and then we're in and out. And to put icing on the cake, after that, this is a little bit separate from, the strategy of the crossing, but what you can do is now take, the break and retest strategy that I like to teach my students as well too. But you can double dip on, taking the 8 EMA crossing the 50, plus the break of structure and the retest and that continuation up as well too. So this is another example. This is just a impulse entry example of when the 8 EMA crosses, as you can see, the 50, but we're taking it prior to the 5 minute closure, right? And then we just go for that 1-to-1. And as you can see, those two trades right here were traded at the NYSE Open. And from there, you saw that, pretty much within less than 15 minutes, you're in and out of a trade. And the last example that I'm going to talk about as well too, and the beautiful thing is that you can combine this with, a lot of the strategies or the confluences that you already use. And this is just another, tool in your toolbox, essentially will give you more confidence. The more confluences you can have, the more confident you will be as a trader, right? So this is just an example of another time where this is about let's just say 2.5 hours after the NYSE Open. So let's just say NYSE Open, you were looking and then you didn't have, I guess, the guts to be able to enter in any of these trades because you were like, oh, this momentum was pushing up. I don't know if I want to sell, even though there's a lot of momentum. Like I can show you 2 areas that I would sell personally before, but let's just say we don't take any of these sells just because, we were kind of worried. So as, price goes on, then we see this 8 EMA catching up to the 50 EMA. Then right here, we see this cross, right? We see it kind of cross. We see it cross a couple times as well too, at the time. But typically what I like to see is more of like a solidified cross, like where the blue line, my 8 EMA goes through, and you can pretty much see it on the other side. So where I would enter on this situation would be this candle right here, right? So this is the candle that makes the EMA cross. And then essentially right here, I would enter the trade like this, right? You would get the 5-minute candle high right here. I would put it right above this level. And if you wanted extra and added, security, you can put it above that range that was created. But for me, I know that usually there's going to be momentum in the market. So I don't really have to worry about price going, consolidating and pushing back up, right? I'm hoping that I'm already in the momentum that my price can continue and push it this way. So essentially I would enter here and stick to that 1-to-1 right here, and within that first 5-minute candle, which is a couple minutes, your TP was hit. So essentially another thing that I want to point out as well too, that is very key, is the type of candles you're entering off of too. If it's a bearish candle, you want to see typically, no matter how big the wick is, you want to see at least a wick to the upside. If it doesn't have a wick, I typically am hesitant to enter. And the reason for that is just that the wick, think of it as like a slingshot, right? The slingshot, the farther you pull it back, the farther it typically goes forward, right? Whatever you have in a slingshot. The same thing in this kind of situation right here, the farther the price pushes back to retrace a level, the stronger that momentum down is going to be. That's what we are big on wicks, right? The wicks will never lie, and they always tell us a story. So essentially, the longer this wick kind of indicates to me, the more momentum is within this candle. So as long as this bearish candle has some type of wick to the upside, I typically will enter. And vice versa with the bullish candle, you typically want to see the same thing, right? You want to see some type of wick to the downside, indicating, they grab some liquidity to the downside to push it up. So these are the type of candles that you typically want to see. Like even right here, the one we entered on might not be the biggest wick, but there is still a wick to kind of give me confidence. There are situations, for example, like this candle, where it does not have any type of wick and it pushes up, and we still see it does go, but it gives me discomfort knowing that I'm entering a trade when it doesn't have the wick. So typically you would want to see a wick, and most likely, when it does have a wick, you most likely will get your TPs hit in that sense. So these are just the examples of, like that 5-minute scalping strategy I personally use. That's, created a very good amount of success these past 6 months for me. And then I also added, it's just another confluence I use added upon all the other confluences that I do. But I've just noticed that it is one huge factor that gives me the confidence to enter the market.
So just to recap for everyone, because he threw a lot at you right there. So essentially what we're looking for is we're looking for the right time to trade, which is right when the NYSE open is. So that way we're getting the volume plus volatility, which is equal in the momentum.
Yes.
The second thing that you're putting on is you're putting on the 8 and the 50 EMA, and you're using it on the 5-minute time frame, correct? Now,
exactly.
After that, what you're looking for is you're waiting for an 8 and a 50 EMA cross, okay? And you're also looking for any other confluences like, a certain candlestick type pattern, like a bullish or bearish engulfing candle. You're looking for it to break out of a range in the previous session, and any other confluences that you can look for, a wick to, the upside on a bearish candle, a wick to the downside on a bullish candle. And you're looking for a 1-to-1 risk to reward ratio. Does that kind of summarize how the strategy works?
Exactly. Yep. That's exactly it. And then obviously you want to just combine it with, the ranges that you've kind of highlighted prior to the open, and also highs and lows, and you kind of just add it. It shouldn't be just the one thing you use to get into trades. It should just be another tool in your toolbox to be able to use as well too.
Hey, this is pretty good stuff, right? The next thing that you need to do is check out this video right here. It's a very simple risk management strategy that I bet you've never heard of that can almost double your profits with changing nothing to your trading system except for your risk management. Go ahead and check that out right now.